Hey everybody, it's Alex from KeenOnTheMarket.com. I just wanted to give you your daily recap video. What a bloodbath today in the market. Basically, uh, I wanted to take a look at the market profile for tomorrow because there'll be some key levels you want to keep in mind if you're trading the E-minis. The point of control for tomorrow is 13.13 even. Your value area high is 13.20 even, and your value area low is 13.10. So those are going to be key levels. We've been seeing sell-offs in the end of the day. You can see if I go through the profile sheet, starting since about the 11th, the end of the alphabet is showing up near the lows of the day. So there's just some late day selling pressure. To me, that's some real distribution going on. Not much going into buying. So that's your market profile. I wanted to go over kind of the daily stance first for the S&P. So we flagged this bear flag here around this 1350 region. We're hairs tick away from the target, which is 1300 even. I actually think we're going to flush through that tomorrow. That might be the capitulation low. And I say that because we got an unusual options flag today that the SPX contract traded over 1 million contracts today. So that is really rare and normally happens very close to possible lows. I'm not a bottom picker here, but if we do get a bounce, that unusual option flow is definitely telltaling possible capitulation in the option market. 5-minute bar, let's take a look at today's trade. There was actually a couple good trades today. Here at the open, we opened in a firm, downtrend beneath yesterday's value area low. Yesterday's value area low was 1324, so it opened below that level. It's quite bearish. Again, too, we have our Ichimoku cloud system that we follow during the day. A light colored cloud for the proprietary indicator we use here at Keen on the Market was indicating very strong trend to the downside, so new lows were to be sold. This rally right here, we actually sold a small position with these dojis. There was actually some crossovers, some technical sell indicators here on this rally. Also the strong trend as denoted by the light cloud, something that we definitely took advantage of. Our target was to the downside. You could see that a simple Fibonacci overlay put us at a 1618 right down near the close. 1303.30 was the target. So we're very happy with how that position went. Tomorrow, I would expect further weakness. Waiting for the capitulation to come in. Let's take a look at the euro real quick today. Pretty crazy action today. I have to change this to 24-hour to get the most accurate system that we use. We watched the euro on 24-hour. We had this kind of indecisive morning action, and then this huge move up, and it looked like this was short covering because it just got totally erased. It just had no follow through, and so the second high here, double top, could have been a good sell, but normally the euro doesn't trade all that well in the afternoon. So kind of flat on the euro. It's kind of in a zone of possible support. As to the beginning of the year lows, I really don't see much bullishness yet, even though there's some doji candles, some spinning tops. There's not a lot of bullishness in the candles yet, so still in a firm downtrend. For oil, the trend is getting pretty strong to the downside, almost similar to the euro. On the dailies, we're kind of getting into this zone of possible support. The lows of January are not really holding, so basically the old resistance, new support line of the September 9th area is going to be coming into play soon at 90 even. What's interesting is I think there's a tremendous amount of industry that is unprofitable when oil is below, I think, 92. All the tar sands are basically don't make money in this zone. So Knowing that fundamental support, I would almost expect to see some type of some buying hedging come in here. So we'll see, but again, nothing really to report. Still very strong downtrend in crude. If we go to gold, I really wanted to showcase this chart today. If it can pull up here. Basically, gold, I talk about this in the live trading room when we go over Elliott Wave. I really think that we are in a running flat. I don't think this was a top of a fifth wave. I really think that this was a A, B, C, X, and this is going to be A, B, C, and then we're going to break out towards the upside. Again, very volatile, choppy price action, very frustrating to trade, very typical of wave fours. Today you can see that it's the third time we've tested this zone in light blue, this 1550 to 1536 region. Again, the paper market really wags the physical market in the gold arena, so there's really not any particular level that I look at. It's just more zones because the paper market can really push the price over the support and resistance lines. Again, a very flat cloud, so even though people are touting bearishness in gold, the cloud denotes the trend, and the trend is just pretty much sideways. So there's no real confirmation of a long-range down run yet. Still very sideways price action. I actually see this as a possible low for gold. We're coming out of the seasonal weak part of the year for gold and silver, and so coming into the summer months, running into September, November is normally the best time for gold. You could see last year the lows were put in around the end of June, early July, and then we just had this tremendous rally. So I'm almost looking for the same kind of cyclical seasonal pattern happening soon. Maybe a little bit more sideways action, a little more pounding here on the bottom, but I don't see much price to the downside. So that is your recap for today. Again, we're having a webinar coming up soon on the 29th. If you would like more information about that, please visit keenonthemarket.com or email sales@keenonthemarket. You can follow me on Twitter. I'm @AlexKOTM. Have a great night.